Lack of funding is among one of the top reasons small businesses fail. Judy Robinett's new book, Crack the Funding Code, How Investors Think and What They Need to Hear to Fund Your Startup, aims to give businesses a broader look into the world of funding. And Judy joins us now. So first of all, how is it fundraising right now in terms, because it gives us a little bit of a read on the economy. How hard do people have to work to fundraise, or is there just like a wash of cash around startups?
You know, there's 269 trillion of global wealth. And so this year, we hit $100 billion for venture capital for investing. And, you know, the thing people need to understand, there's 300 angel groups around the nation, equally from Silicon Valley, all over the place. We now have family offices investing in startups. And so from my standpoint, you know, it's very bullish. It's always been difficult to raise money, and the reason I wrote the book was to demystify that process. I was always so sad to go around the country and see how many people that should be funded couldn't figure it out.
Yeah, so what's the mistake that people make? I mean, are we talking just about the initial pitch meeting of not being able to explain your business, or is it that you don't know what you're actually looking for? I mean, you don't know if you need an equity fundraise or if you just need cash, you want to take on debt. What seems to be the biggest hang up from people who are trying to get funding for their business? You
know, the biggest hang up really is not understanding that you have to view the investor as your customer. They want to know you're going to have a successful business. And so you can position yourself as a high potential startup by being really clear on your exit, looking at comparables, and then mitigating risk as viewed by the investor. And you are right on the pitches. Most people don't have that done well, and they don't have their pro formas done well.
Should you be looking at investors as potential mentors? I mean, is that some sort of relationship that you want?
Absolutely.
And should you not take investors that can't provide that service?
Yes. So angels typically have had an exit, and they love to coach, and they're looking for founders that are coachable. If you're arrogant and a know-it-all, that's sure way you're going to get kicked out of the room. And so absolutely. And you want to have people who are going to bring more than the money. You don't want bad money, so you want people who are going to help you the best you can to grow your business.
To the point of getting kicked out, it does seem that happens sometimes when you take investors in. Is that just inevitable because you have new blood coming in and people have different ideas of how things are going to happen? How do you protect yourself, I guess, in that case?
Well, it isn't really a matter of protecting yourself. So the same skill set that it takes to be a startup is often very different than when you move into growth. Like, I love the chaos of startups, but when it gets to operations, I like nothing to do with that. So it isn't always that you're going to do that. And usually it should be in agreement with your investors for the good of the company.
Now, you mentioned all the different kinds of investors that are getting into this space: family offices, high net worth individuals, private equity. Do you see, I guess, less discipline from some of those people who may be tourists in the angel investing space? I mean, those companies, they have certain needs. As you said, they don't need an operator CEO with an MBA. They need someone who knows how to grow a business from 2 people to 10, and then maybe you do your next round where you get an operator. But are you seeing kind of a lack of discipline, I guess, with some people floating into the space?
Well, you know, it's really interesting. A few years ago, when the family offices started getting involved, the angels complained. But, you know, before that, the venture capital people complained, like, what are these dudes doing? Now, there was just an article a couple of days ago in the Wall Street Journal that said Main Street isn't such dumb money, and the smart money isn't quite that smart. So we're seeing an equal playing field.
I know a lot of people who have MBAs, and it's like, really? Okay.
Have you noticed a difference between men versus women in terms of getting funding?
Yes. So it is harder for women. The good news is that's changing a bit because there's been so many women founders who've had successful exits. They're starting VCs. And we have groups like Springboard that have helped raise $12 billion in funding for women founders. Golden Seeds, which is the 3rd largest angel group in the nation that is focused on women founders. So I think the news is getting better.
Before we let you go, I mean, I think people would think, oh, this lady's talking about funding and startups. She's based in Silicon Valley. You're based in Idaho.
I am. I'm in Idaho.
But we have so many people on the show, and there's so many people out there actually in the political world talking about how we get the middle of the country, and I know you think you're very Western, but how we get other places besides San Francisco and New York to do well. Yeah. How is Idaho doing? Like, are there people trying to start companies there that you're advising?
Yes, and you brought up Salt Lake City Qualtrics. So the Salt Lake is known as Silicon Slopes. We have numerous unicorns there. So those 300 angel groups from north, south, west, east, they're in every state. And so you don't have to go to Silicon Valley or New York to get the funding. 75% of angels prefer to invest in the state they're from.
Judy Robinett. The book is Crack the Funding Code, How Investors Think and What They Need to Hear to Fund Your Startup.